All right, MCE crew. This is the moment that you've all been waiting for. We've got Adam Thorpe of True Perception Investments here. I'm going to link to all of his stuff in the description, but he is here because we're going to talk about all things digital assets. Okay, now Adam and I were talking earlier, and man, I feel like I've had this feeling twice before in retrospect. When we went through the whole computer revolution, okay, I'm old enough to remember when you never encountered a computer and you still were able to make it through a day, okay, just fine. Then that revolution started to happen and people started to ask, what am I supposed to do with a computer? I don't need this thing, okay? And then here we are decades later, and we literally cannot take this device out of our lives and expect the world to keep spinning, okay? That was the first time. And then the second time was the whole internet revolution. When we had players like Google come onto the scene, and those guys, they came up with this idea, but in the beginning, they didn't even know how to monetize it. They were like trying to figure out, okay, now we've got it, what do we do with it? And then they came up with this advertising idea, and they were told, what are you, crazy? Yellow pages, newspapers, local TV, they've got this sewed up. And again, here we are decades later, and social media and internet advertising is among the most effective. We're sitting at that same place, as far as I'm concerned, with digital assets. So a lot of my audience has asked about them. I need to know more. And you have been kind enough to, agree to share your expertise with us. So why don't you first tell everybody a little bit about yourself, Adam, and your platform?
I appreciate you having me on. Last time we talked, I had a lot of fun. This is going to be a little more organized, I feel like, than the first time. We were kind of shooting from the hip there. But my platform, I started it because I started seeing some of these things that appear to be building narrative-wise. You got like the climate thing. COVID has really become a big thing for certain agendas are going faster than people thought they would, all this other stuff. And inflation, hyperinflation, just everything like that. And I got back into crypto. I was actually in crypto in 2011 for a few years, got out and didn't get back in until the beginning of this year. And my father-in-law had just been barking at me, man, about, certain digital assets, the main one being Xrp. I'm always raging about that. I started looking into it and just seeing some of these things that look like they're happening. And I just got to a point where I really kind of like, me and you, I've told you this phrase before. You may have heard it before, but I've used it with you, is that you have three types of people in this world. You have the people who make it happen. You have people who watch other people make it happen. And then you got the other guy sitting there wondering what the hell just happened.
Right.
And I started just seeing a lot of this stuff building up, and I started looking into crypto a little closer. And I'm not sitting here trying to paint digital assets as a savior. It's not a political or ethical stance by me whatsoever. I see a financial opportunity. That is 1000% what it is. I am extremely bullish on everything that I am in. It doesn't mean that it is, most of it's not from an ethical. I mean, some of them, I have to be honest, some of them I'm kind of like, I don't really like their roadmap, but I see success at the end of it. And for me, I just, I felt the need that once I started making certain decisions for myself, I started thinking about my family. I started thinking about my friends. I started thinking about, extended friends and family. And I would talk to people. Nobody knows what you're talking about. I'm like, oh yeah, about da 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 da. They're like, what the hell is that? Mm-hmm. They're like, oh, Bitcoin. I'm like, no, not Bitcoin. They're like, yeah, Bitcoin. It's one of those things. And that's so my whole thing was just to kind of spread the word. I've researched stuff a lot this year, like a lot. I literally, I probably spend a good 25 hours a week still. These past weeks, maybe not so much. I kind of took a step back. I had to. I was pumping out too much content. I needed to take a break. Spend too much time in my office. But that's the gist of my platform, is just to educate people on how to do the research, how to purchase, how to trade, how to send back and forth, different strategies, how to utilize stable coins. How, in my opinion, volatility is the whole reason I'm here. And I know that terrifies a lot of people, and it should. You get it, there's a fine line between educated gambling and investing, and I like to walk right on it. So it's not that I'm not saying that that's the end all be all strategy by any means. There's so many ways you can go about this thing, and yeah, that's pretty much why I started my channel. I just wanted to get out the knowledge I was learning. So many people that were close to me were asking me questions all the time. I said, well, I'm just going to make a YouTube. Yeah. And honestly, it was like, maybe I can monetize it along the way or something, which that's, I still got a ways to go for that. But that was the gist of it. It was just to kind of spread the word. I was spending enough time learning it that, in business, I'll defer to experts in their fields when I have questions. I don't go try to become an expert at things. So I knew that I was consuming a lot more of this information than anybody I knew. So it was kind of like, okay, since I'm already doing that and not sharing it, might as well try to share it. So.
Precisely. No, I get it. Same here with, we focus on the more traditional asset classes. But again, this thing is evolving so rapidly, and it's clear at this point that digital assets are going to be the way the monetary systems and the global monetary system operates going forward. So having said all that, I want to jump in. Let's first start this discussion with the most popular digital asset out there. Now, it's so popular. In fact, like earlier today, I was saying it has that Jello effect where nobody refers to it as gelatin, which is what it is. They all refer to it as the brand name, which is Jello. So Bitcoin has really achieved that status in terms of, the digital asset world. So break that down for us a little bit. Give us some of the differences between these cryptocurrencies, stable coins, that whole thing.
Okay, so I got some notes here just so I don't get lost, because I do that a lot.
No problem.
My brain's always going a lot faster than I am. So you have right here, I have written down, so you have cryptocurrencies, you have what are called utility tokens, you have DeFi tokens, there's reward tokens, you have stable coins. And each of those things, it really means is that that's their use case. That's how they function. So you have a cryptocurrency, Verge, we'll reference them, XVG. They are a currency. It is mainly used to buy and sell goods online. They have partnered with several big websites. I actually know the original dev. He's partnered with Manny Pacquiao. They do a lot of charity and stuff now. And its main use is to send value. I started saying value instead of money because I feel like that's an important threshold people need to get through too. Just value. I think money, that's old. It's this value. Value can be anything now. And so that's how they function. Then you have utility tokens. Take the Ethereum network, for instance. Any action that you really take on there, whether it's a transaction, staking, sending back and forth, which I guess is technically a transaction, but everything on the Ethereum network, you have to spend Ethereum for the network to function. They call it gas fees. There's a lot of different blockchains that have similar mechanisms as that, but that's essentially what some of these utility tokens are. They are needed for the chain to function the way it's meant to function. In order, you have to spend it it's that's why they call it gas fees. It's the fuel.
Got it.
DeFi tokens, I don't want to get too far into decentralized finance because I think that just gets us way out there. I think we're sticking more to some basic concepts for today, which it just stands for decentralized finance. You can park your assets there. All the intermediaries are gone. So all the fees are pretty much gone. And I'm getting APYs well over 100% on my assets right now. On multiple platforms. Just whole set of risks that come with that. But, that's what we'll save that for another time. It's one of my favorite topics though. Then you have stable coins. So with those, they're supposed to be pegged to whatever they're pegged to. Some like Tether, USDT, was supposed to be pegged to the US dollar. They said they were, 85%, and then it turned out that they were only about 20%, and that most of their money was what do you call them? Not IOUs, but oh, I can't believe I lost the term. Paper notes, basically.
Okay, like a bond or something.
Yeah, essentially,
Okay,
it wasn't liquid.
got it. Okay,
They still had it. They had backing, but it wasn't as liquid as it's supposed to be. And if you're gonna back something by $1, you want it to at least be as liquid as $1. I mean,
sure.
If it's backed by $1, it should be. You got USDC. They're in a similar ball game. You have some that are starting. There's some tokens that are pegging to gold. I told you I invested in Universal Gold, which is a Ethereum-based token that is pegged 1-to-1 per token to troy ounce, and that's backed through like the Perth Mint and all these people in Australia. It's state backed, so there's all. If that's the type of security people, it's actually really cool, man. You don't have to pay for storage, the climate control that goes into storing gold properly. Transportability is gold's main issue. If it has any issues, it's transportability and storage, because you got a couple $1 million worth of gold. You can't just have it, sitting in your living room. Yes, you could, but I wouldn't do that.
Not secure. Right.
Yeah, I would do that. And then you have other stable coins that are called algorithmic stable coins. And to my knowledge, none of them have been successful yet, but I find them to be the most intriguing, because they're basically using an algorithm that takes into effect whatever. I don't know the parameters, honestly. I think it's market parameters that are set, and it analyzes all this stuff, and its value tries to kind of just stabilize in the middle there as like an anchor for all of it. Not that it stabilizes the other assets, but it will fluctuate with the assets so that it's constantly reflecting like similar value, I think. None of those I've seen have been successful. They get crazy, and it hasn't worked.
And see that is a good, it's another good jumping off point, because earlier you talked about these things, representing value, and you're right. That's an important distinction that we need to start making, because value, either a store of it or being able to use it as some type of medium of exchange for another type of value. That's basically what money does. But we're so, programmed over the centuries to think about it in terms of a currency issued by government. Okay, so I know the governments, and we'll talk about this, are coming out with the central bank digital currencies.
Oh yeah.
But correct me if I'm wrong. The whole, I guess the thrust behind this is to solidify this whole industry and get it to where people are using these things as a store of value and also a medium of exchange. Is that what we're looking at here?
Yeah. I think that's a good way of explaining it. It's like I was saying on that Facebook thing. It's like the currency part of the word. That's why I don't call it cryptocurrency. I'll either say crypto or digital asset. The whole currency thing, it's like you were saying, that's ingrained in our minds. And I mean, if you talk to some like really serious blockchain guys, they get like really philosophical about this stuff. I don't get quite as deep as some, but yeah, and it's something I was going to say when you were talking about this too. Our current monetary system globally is based on debt. So we're borrowing money from a government that makes it out of thin air, and then we have to pay it back through tax. Just the whole thing. It doesn't make sense, and that's where the whole Great Reset narrative comes into play, like a new Bretton Woods moment, because it's broken. You can't fix it. There's no way that you'll ever just remove that debt unless we all just decide that the 260 trillion global debt or whatever it is, it's just, if we all agree that it's gone, I guess that would work, but I don't see that happening.
Right.
But what excites me about digital assets, and not just digital assets, gold, a lot of different assets play into this, is that it makes more sense to me to moving forward, especially into the future, to have an asset-based economy. if I hold certain assets that have a value to you, and there's some sort of transaction that we want to take place in, there should be no reason that I can't hand you a bottle of this random aloe gel here. And if that's what you need, it like a barter system almost.
Sure.
Not exactly barter. I think there's got to be rules and stuff, but it should be. I mean, if you have a mountain of gold and that's what you want to spend at the grocery store, picking up some steak, it's Friday night and you don't want to spend fiat or whatever's on your other card. Oh, I'll spend some of my gold since I've had that for so long. You should be able to do that. And you should be able to earn interest on the value of your gold, in my opinion. You should be able to make loans to your peers using your own gold if you see fit.
And the technology now gives us the ability to make those different types of assets, like that one card that you were telling me. We'll get into that, but the technology gives us the ability to make something like that actually,
liquid.
Work. So if we go back, I mean, every single time we've got the Song Dynasty where paper money came from in the first place. They got print happy, and they ended up with all these financial issues that led to the destruction of their society. The Romans, the Weimar Republic.
History doesn't always repeat itself, but it sure does rhyme an awful lot.
Absolutely. So when you're talking about, when you count the unfunded liabilities of Medicare, Medicaid, and Social Security, we're up well over $120 trillion in debt. Okay. Totally unsustainable. So, question. Someone wants to, because this is the other thing that people, including myself, are kind of mystified on. Someone wants to go out and they want to purchase a digital asset. How do they do it? Where does it reside, when we're not in use? And how do they keep it safe? Those are the things folks want to know about the dollar bill. So how do we do those things with digital assets?
Okay, real quick. Give me those 3 points one at a time, just so I don't get lost, because I know I will. The first one is, where would you go out if you wanted to purchase some crypto?
Correct.
Okay. So the place you would typically start would be either one of the crypto exchanges, which there's hundreds of around the world, or some broker dealers offer services now. If you're accredited and you bank with certain banks, you now have access to crypto through them. So there's that. For the exchanges, you have so just to be very mainstream and not send anybody off into the total unknown, Coinbase is probably the biggest one in the States. It's huge. Its interface, very easy to use. You could give it to your grandparents, and as long as they know how to function a smartphone, I'm pretty confident they can find their way around the app without too much trouble. Another cool feature that they have is they have what's called Earn and Learn. You watch these little, very short videos. They're more like animated pictures, kind of.
Okay.
And it gives you a little bit of information about these tokens. You take a quiz, you pass the quiz, they give you free crypto for each of those assets. Usually give you like anywhere from $3 to $5 worth. It's nothing major. But I also tell people that are interested, go on there. Right now, you can earn about $40 worth of free crypto by taking about 10 quizzes. And you will learn about some of the functionalities about these cryptos. None of the cryptos that they usually have on that section are anything I'm invested in or that I plan on investing in. But that doesn't mean they might not be a sound investment for somebody else. There's also another one called Uphold, which is more of it's a broker. They sell securities. I think even Coinbase, I think on Coinbase Pro can do securities as well, but they offer some accredited services on Uphold, and they also offer metals, different currencies. You can do a full-on currency exchange there as well. Those would be the two that I would suggest people just start off at, get familiar with those. The user interfaces are so simple. There's because when you get into some of these other ones, it turns into you got like the order books flying by everywhere and all the pressure graphs and everything, which is fine with me. I don't mind that, but just getting into it, if you want to make it easy, go to either Coinbase or Uphold. Great platforms.
And you said Coinbase actually has the training.
and learn. Yeah.
Got you. Okay. So even if you decide not to move forward with any of the ones on their platform, your time was still well spent.
Yeah, you go in there and get some free crypto and sell it and invest it in GameStop if that's what you're into. You know, I mean, hey, it's free. You could get it and wait and see if it's the next Bitcoin. Your $3 might be worth, 10 grand
Who
one day.
knows?
Who knows?
Right.
Who
Right.
knows?
Right.
You know.
Right. All right.
Now the second part of that.
The second one was where does it reside when
Okay, so
you
storage.
bought it? Where is it? Yeah.
Okay, so what blockchain essentially is? Well, we'll get to that. I know you're going to ask me that here in a little bit. We'll cover that in a second. But on the chain, the blockchain, each blockchain is its own network of decentralized servers. A lot of them are all around the world. Some blockchains have 22,000 individually owned nodes that are scattered around the planet, satellites, you name it. And they help run consensus. That's what everything validates. And we'll get into that, but they when your assets, like when you purchase an asset, it's generated on a blockchain, and it's always going to be, to an extent tied to that blockchain. When you buy it through an exchange and you leave it there, there's one thing that's very important for people to know, and I think it's similar with certain stockbrokers too. I might be wrong, but I think it is. So they are what is known as a custodial wallet, basically. Their wallet, your wallet on their platform is actually their wallet that has a special ID that is associated with you. Mm-hmm. But the assets that are shown in your balance technically are basically IOUs that you're going to expect them to honor at some point. So I always put that out there. The ones I use, I'm fully confident in, but people should know that, because as an investor, you want to know if that's a possibility. I mean, in theory, if they got banned globally, which is pretty hard to do now, but if something like that were to happen, I mean, you could maybe not get your stuff. Okay. Some of them even have insurance on the exchanges now. If your stuff gets hacked, they refund it. There's a lot of stuff like that coming into play. They do have asset insurance now, black swan insurance for crypto that you can get. It's expensive, but if you got enough going on, I mean, it might be interesting to some people.
Worth it. Right.
Now, they also have non-custodial wallets. Non-custodial wallets is where you control your private keys. So there's an encryption process that goes on in these things where you have to, when you're confirming like transactions and stuff, there's like a multi-sig process. It's not as complicated as it sounds, but it's I lost. Oh yeah. So when you're doing that and you have one of those wallets, like I use Trust Wallet. It's mobile only. It has to be on your phone. They give you this really crazy seed phrase, and if for some reason you lose your phone, the app gets lost or whatever, you use that seed phrase to recover your wallet. But because it's non-custodial and you control the keys, your assets are stored directly on the blockchain. Picture it as like a folder with some files in it. Okay. Think about it just for like the visual. That is stored on a particular hard drive that's comprised of 10,000 nodes around the world. It's stored there. You lose your stuff, it's still there once you recover with your seed. If you lose your seed phrase, man, there's horror stories out there. People have like really been upset with things they've misplaced. Sure. So it's also something you have to keep in mind. You should have multiple copies in multiple places, maybe even with somebody that you really trust who doesn't even know what it is, but you scatter that thing. But you're able to recover it. What's great about that is it's super secure for the most part. You could still be susceptible to like a phishing attack, some sort of back-ending hack, because you can connect these wallets to different interfaces and stuff. So there's still some navigation that needs to be done. Gotcha. Then they have hardware wallets. Those are, for long-term storage, there's no option. Especially if you're investing heavily, if you have like a large sum. Some of them are cool. You can buy one of these. This is the Ledger Nano S. It is a cryptocurrency hardware wallet. I have one I actually ended up not using these. I went a different route, but I had one sitting right here. I was going to show it to you guys. I don't know what I did with it. But anyway, this thing is basically a USB stick. Yeah, you can see it pretty well,
Yeah,
actually.
yeah, we got it. Yep.
Um, Super cool, man. It's really like kind of tedious. You got to push button combinations, and it gives you like a 16 randomly generated word thing, and that's your phrase. You got to keep that. But what's cool about these is you, through their interface, whatever it is, your assets are stored directly on their own blockchain. So they're still existing on the chain and they're locked to their whatever. But the only way to access them is through this. If you lose it, you can recover it using your seed phrase, just like everything else. But that's kind of the beauty of the decentralized nature, is that if 10,000, if 9,000 and 10,000 nodes vaporized in an instant, the network is still going. Now
Gotcha.
you might
Okay.
have some lag or something crazy that
Mhm.
happens, but like, so they also have what I am using, what is called a Tangem card. That's Tangem. That's tangem.com. I suggest checking those out. Those are RFID technology. This is actually that XRP card we were talking about, but
Yep.
they're RFID technology, and through certain apps, you get on the app, you have your stuff sent to whatever wallet, you tap it, and it puts everything onto its own blockchain, but it's stored on this card with this RFID chip. And then you just got to make sure that's safe. There's a backup thing you can do where you can create multiple copies of the same key and then disperse them. It's my favorite method. It's easy. You tap, it does it. There's no buttons. You just want to make sure all the information that you need is saved and like can't be lost permanently, because if that happens, like your assets are gone. There's nobody to call, and even if there was, they
Wow.
can't do
Okay.
it. Even if there was, like, you can't do anything about it because the encryption is really crazy. Like, it's not gonna.
So with that, because I know some people that might raise some eyebrows, but years ago I'm pumping gas and I look up on the pump and here's this wallet, okay, and I'm like, oh, some dude left his wallet. So I'm going through, I open it, try to find out who it belongs to, and this guy's got like hundreds of dollars in this wallet. So I take it into I find a business card. I take it into the gas station and I call dude and I'm like, listen, you've got X amount of bucks in your wallet. He's like, right. I said, I'm giving it to this guy in the in the gas station.
Yeah, yeah,
Uh,
yeah.
you need to come pick it up. He thanked me profusely, but another guy shows up at the pump. This guy's cash is gone. He's
Oh
got
yeah, oh
so uh we're not, it's not like we're not used to dealing with something like that
yeah. Yeah.
when it involves our
And
money. So,
I know it's really overwhelming for a lot of people because when you're explaining these processes, it's so techy, and that's why I was a huge geek growing up, man. And like, I mean, we've talked Star Trek, I
yep.
love technology, and like, so that's one of the things that got me so into all this. It's just so cool. But yeah, those RFID ones, man, I think they're really cool. The thing is that you want to take into consideration is if you're somebody who's into trading on a frequent basis, having it on cold storage like that is not the best way, because if you see an opportunity for arbitrage, or maybe there's a dip and you see a point of entry, all of a sudden you're like, oh my God, now I can go. You have to actually, and if that involves another trade, you've got to go get your stuff, get it back to an exchange, then do your transaction. You can't transact from that card. It is storage only. It has no functionality besides unlocking and locking your assets.
I see. Okay. Okay. So you kind of answered the security question
Yeah, yeah,
along
yeah.
with the storage piece because
Yeah,
uh,
that really is the whole security thing. And
uh-huh.
outside of that, you just can't, Twitter, I encourage people for crypto to get on Twitter, follow some of the bigger influencers. It's kind of a cesspool on there, but once you really like nail down, and anybody who wants to add me on there, I can show you all the people that I follow. And I've been pretty selective of who I follow, because some of them get too crazy for me.
Yeah.
Like,
Yeah.
but there's just so much information. It's live. You can follow the actual companies behind these blockchains. They are constantly posting content, YouTube videos, doing interviews, AMAs, all this other stuff. The fintech industry is like very alive on Twitter. It's interesting how like certain things that I'm so used to with like Facebook, Instagram, and all that. You go to Twitter, and it is a whole different platform, you know. And
No, man. I've been saying now for a little while that, and you agree with me on this when we talked initially, that you can't be the days when people were able to just be passive participants in their personal economy. Those days are over, man.
moving too fast for that.
Yeah, yeah, it's over. I'm even looking at the banks because I own some JP Morgan and some Wells Fargo, and I'm looking at that like, 10 years ago I could have been, had a long-term kind of horizon on it, but now with so much going on, I think that you've really got to be an active participant. People have really got to make that switch because you're seeing the development of personal economies, like with what El Salvador just did, with saying that they've created a more favorable or really no tax structure around Bitcoin. If you bring it through their nation, and was telling somebody, look, that's something that used to be reserved for the uber wealthy with a Swiss bank account, and now you can be somebody who has a couple of Bitcoin. You go down there and you can do that with them. Ukraine,
Yep.
Ukraine just did something with crypto in the last 24 hours. So I think a lot of these countries are starting to figure out, hey, this is
Oh
an
yeah,
opportunity,
that whole Asian Pacific region, man, Singapore, Japan, China, everything down there is raging. India is a big player. They ban crypto every 10 days and then it's back. They're the news that comes out of there, it just blows my mind. I'm like, how can these people switch gears so many times? It's like, but the governments are like that. They don't want you to know everything that they're doing. They got to keep us on our toes.
Right.
But I do, man, like what you're saying, and this is my thing about crypto. Okay, you shouldn't invest in things you don't believe in to an extent. I do say that, but like, if you see, I mean, crypto is making more millionaires than any other market on a daily basis globally. Now, some of these people, dumb luck. There's a lot of that happens. There is because, and to kind of talk about what the one gentleman on that thread was kind of hinting towards, it is almost 100% speculative market. It's very speculative. Bitcoin, in my opinion, is 1,000,000% speculative as a store of value. It's only worth something because people still think it is.
Right. And I wanted to get into that. I wanted to understand, because I know you're not, a big Bitcoin enthusiast. I wanted to understand why.
Well, for me, okay, I won't go too far down the rabbit hole because this will turn into a long video, but
okay.
I look at blockchain technology was invented in 1991. A lot of people don't realize that. I think the first patent was actually in like 88, 89. But blockchain, where I have their names here, it was Stuart Haber and Scott Sterdetta. They were researchers. They wanted to implement a system where document timestamping could not be tampered with. So, and that's a big, transparency is a big thing with blockchain. That's why for the finance world, it's so prominent in like some of the assets. You see a lot of them are geared towards the payment sector. And that's, because they can make the transparency that will go into it. And this is why you're getting a lot of blowback too, is you can go to Xrp Scan, Etherscan, any of these websites, and you can literally just watch the blockchain and all the transactions publicly going by. And it shows you what wallet they're assigned to and everything. Now that wallet does not have a name attached to it or anything like that. It might if it's through an exchange, but if it's a private wallet, it's not attached to your ID. It's really the exchanges that take place and all that. But so anyway, it came in 91. Then I don't think anybody knew what it was outside of these two guys, maybe, it's like,
right. Okay.
Then you had the early 2000s. One thing, look at the timing of Bitcoin. They always talk about the phoenix rising from the ashes, from the Great Reset. That's like a big thing in crypto. And right after the 2008 crash, Bitcoin popped on the scene. It's interesting. It was almost in response to the bubble popping, which was because of inflation and really irresponsible banking laws and stuff. They came out with, maybe an alternative is what it appeared. And it's just, I've followed it for a long time. We had Bitcoin back in 2011, which is only a few years in. We were getting them. I had purchased Bitcoin at single digits at one point, and I was still purchasing and trading in at triple digits. But this was all like peer-to-peer stuff. It wasn't, they didn't have all these exchanges and stuff. It wasn't like that back then. It was really obscure. And just the whole Satoshi Nakamoto, they look at the translation, and I believe it's supposed to actually mean decentralized. I think there's a rough translation of the name. The same code base that was used to create the blockchain network was the NSA did create it. That doesn't mean the NSA is behind it. That just means somebody that's familiar with that code compiled it that way.
It's like DARPA in the internet. Yeah.
Yeah. I don't want to sound like I'm going there, but
right.
There was a lot of that stuff. And looking back on it, the main use case for Bitcoin once upon a time was purchasing on the dark net, money laundering. There was a lot of things that were going on. Now, I will tell you, a very small percentage of crypto transactions are being used in that way. Cash is a much more friendly way to do dirt. But because of all that, I ended up developing this theory, and this is, through listening to different people over the years. And I just found that it was interesting that it sprung up from the ashes of a recession, of a crisis. And then it had no real value. And I always wondered, like, why are we buying and paying for this thing? And then I looked at the proof of work concept back then, just all the energy consumption. I used to tell my buddies, I was like, this is weird. I used to joke about us creating the matrix, like we're already in like the singularity phase and we're feeding it. We don't even know it, Yeah, I used to get into all kinds of stuff. I'm like, it's weird. And I just find it interesting that it was basically propped up for being stealth. You couldn't track it and all this stuff. So all this dirty money kind of pushed into it and raised it. And it's just, and then I look at some of the government activity with all of it. And I really do feel like Bitcoin is the BlackBerry of crypto. I say that all the time. And like, man, the BlackBerry, it's still a cool phone. But like when it came out, like, it was a cool phone.
Yeah, it was all the rage, man. Everybody.
The trackball.
Yeah, right.
Yeah, man. So, but then the iPhone came out, and it was like, this is a cool phone. Right. And I think that's the same thing with digital assets. Bitcoin bothers me still to this day. The Bitcoin marketing campaign has been one of the most mind-blowing things I've ever witnessed. Even on like financial media and stuff, like nobody talked about the energy for so long. You have like these Anthony Pomplianos and all these guys, like I've always got a very like strange vibe because they'll confront those guys about problems with blockchain and they will just keep talking about other stuff and totally just act like that didn't happen. And nobody ever holds them accountable for it. I watch like a lot of CNBC because there's some shows on there I like, and you just watch these guys and it's like nobody's calling me. You can tell they're full of, you can tell sometimes.
Right. And
I just think that so many people were invested early when the major bull run took place and everybody made millions. They're so invested, that Michael Saylor guy we were talking about. Right. You can just Google Michael Saylor goes crazy. I'm sure you'll find a little bit of footage out there. Okay. I think they're really holding on though to they're talking their book. That's what they're doing.
Gotcha.
That's what they're doing.
I want to cover two more things before I let you go. We'll save the best for last. We'll talk about XRP last. But you've got something you introduced me to. I knew nothing about the Bank of International Settlements, which is the central bank of central banks. Guy came out, one of their head honchos came out and
probably Augusta Carson's. It's always him, I swear.
It might have been, I did a video about it, but came out and said, look, central banks, you guys got to get it together because this thing is running beyond you now. You guys have got to make up your mind about your central bank digital currencies and do something. And for a guy like that, who I'm sure is trained a dozen different ways in diplomacy, you could tell that he was like, had a big sense of urgency about it. Okay.
Oh, yeah, man.
So
They know that the legacy systems of the world are under severe threat right now, severe, because all of a sudden we're able to, we talked about this, like the price of Bitcoin, and I talked to you about tokenized metal and tokenized real estate, which is becoming a thing. Just to kind of play off of why they're threatened, and then I'll let you get back. Beforehand, if you wanted to buy gold, what was your minimum purchase? Is it an ounce? Is it by the gram? I honestly don't know.
it was if you wanted to do something like a gold eagle, which is that's an actual US mint product. You could get you could get it small as a 10th ounce.
Okay.
Yeah.
So that's how they have. Well, so now what I was going to get at is you can actually buy, you have $5, $10, you can buy crypto, you can buy anything that's on a blockchain that's been tokenized can now be purchased like that. So it does open the door for, like I think I told you, we had some inheritance that we were able to play with when we jumped into this thing. But when we initially started, we took our stimulus checks and, we just took a blind leap with them when COVID first happened. And honestly, it helped me open my company and get everything rolling. And it was a pretty major help. But I'll let you get back to what you were saying.
Got you. No, that's helpful, man, because I think you addressed it. These guys they're pretty concerned, that they're losing control of the legacy system, but pretty much, and
Are you familiar with Axios?
I've heard about it, but I'm not.
They do like specials. It's like news stuff. I feel like
the news thing. Yeah.
So I just pulled up an article. This is from July 22nd of this year. And like the title, the 81 countries exploring central bank digital currencies. And they have a whole map. 33 of them are researching. 16 were developing. 12 were piloting. 10 were not really active. There were some others. 5 have launched and 2 have canceled. But 33 are researching right now. The States is one. Most of Europe, it looks like. It's. I just wanted to say that.
Yeah.
It is a big thing.
Yeah. And we'll.
I actually found a BIS article that I have pulled up here. It was a pamphlet that they sent out. The Committee on Payments and Market Infrastructure, Markets Committee. They put out a release in March of 2018 about CBDCs, and I'll send this over to you when we get off of here so you can check it out. And it literally, in their opening statement, I'm not going to read the whole thing, but it says the analysis of the committee reflects initial thinking in this rapidly evolving area that is a starting point for further discussion and research. We also highlight that the issuance of a CBD requires extremely careful consideration. So they've been thinking about it for a while, man.
Yeah. So anybody out there that you need to take it from the Bank of International Settlements. This is happening. Okay, this stuff is here. It's not turning back. It's not going anywhere. Now, as I said, last but not least, let's talk about XRP. Give us the rundown on that and bring us up to speed, because I know that there's some litigation going on with them right now.
Yeah. So XRP is a digital asset that was created by the company Ripple. I believe there's 100 billion of them. 50 billion of them are in escrow roughly. That escrow releases every month, goes to some exchanges, some strategic partnerships. If it doesn't get bought up, it goes back. Just in case anybody encounters that, because everybody says, well, Ripple controls the escrow, but it's cryptographically controlled. And basically what their initial mission was cross-border payments. I have the Internet of Value is something that they talk about. And basically they think that value should be able to be transferred electronically just as easy as information is on the internet. So they created the concept of the Internet of Value. I won't get too deep into that, but so one of the things, where's it at? I just had this. So RippleNet is one of their main products, and these are all targeted towards central banks. They've been partnered. They did a MoneyGram thing. They did a Western Union thing. They're partnered with Santander, a Bank of America. That's one that a lot of people aren't always aware of when I bring that up. Tranglo, which is huge. Standard Chartered, to partner with them.
Okay.
The big American Express. This is just stuff flying by on my screen. But so basically, the term frictionless is something that you'll hear a lot when you look at these payments tokens, and they just talk about the level of friction when you're sending stuff back and forth. So one of the things they wanted to solve was cross-border payments. So just to give you some insight on Swift, which somebody talked about, Swift GPI is like the improved messaging system that they're using now. So about 50% of Swift GPI payments are credited to end beneficiaries within about 30 minutes. Credited. Takes 3 to 5 days on average for them to become liquid. And, you know, but that's also in local. So when they go outside to South America, Africa, and a lot of Asian countries, in the more exotic corridors, it can take up to 10 days for the transfer to be completed, and they have massive fees. And what Ripple has achieved with their technology is you can send value via the XRP token, 3 to 5 seconds for settlement with finality. It's 100% transparent because it's modernized messaging on a distributed ledger blockchain. And the liquidity solution that it provides is 0% in pre-funding. So the banks, they're always saying, hey, Tyrone, I need to borrow a couple billion from you so I can give a couple billion to Dwayne because I don't have a couple billion in liquid, and then we got to do this whole dance. Well, in this sense, if I have 10 billion or whatever, I can essentially, and I don't know if this is exactly how this works, but this is what I've always gotten from it. I already have the assets. I can purchase the XRP asset. And even though your people say, well, what about volatility? I mean, there's not that much volatility in 3 to 5 seconds. These are these systems are set up for me to send it to you now, and you accept it, and then it immediately converts into your currency of choice. It's called a bridge asset. That's what they refer to it as. So, and they have a few services. They have RippleNet. They have a on-demand liquidity where you can purchase XRP to acquire liquidity exactly when you need it and then use it. Of course, these are, and they do a lending thing for banks now too. They're working on it. This is all for banks. You're not going to call Ripple for a loan or liquidity yourself, but that's what they're all about. It's expanded a lot more than that now, though. They are actually piloting a private ledger for central banks that sits on top of the existing ledger and interoperates with it all. And essentially, they talk about right now you have a basket of global currencies that kind of sits there and does this, and it's through some other ledger technology. It's just antiquated at this point, and they essentially want XRP will end up potentially being a bridge asset that is in there with all these tumbling assets from around the world, and it essentially creates interoperability between all of them through it. So you can basically just turn whatever asset you need into XRP and then immediately turn it back into what you need on the other end of the transaction.
So that's basically how we started this conversation. That's that barter system enabled by technology. And correct me if I'm wrong, but I'm envisioning what's happening in the middle there is the calculations are being made based on value of whatever the asset is. And that 3 to 5 seconds, man, that's actually faster than, I can make transaction for groceries at the automated checkout. So that would, as you said, definitely address that volatility piece.
Well, and just think about if you use like the mobile banking on your phone, you're going on a road trip and stop a couple of places, you look at your balance, pending. Well, eventually that's not going to be happening. No, you already paid. It's not pending. No funds are being held up. All the funds being held up, that's because it's bouncing through 17 different banks just to get from the 7-Eleven POS system to whatever conglomerate of banks it's going to. It's really the only reason it takes that long. It's crazy.
So you're saying that, because in my younger days, I played that arbitrage game when I was in college with my card, at the gas station, I had to maneuver a little bit, but you're saying that Tyrone Jr. is not going to have that ability
I
because it's
don't.
not.
Eventually, probably not. Yeah, yeah.
Okay, got you.
Now, as far as the litigation goes, they got sued by the SEC. It was Chair Clayton's last day on the job. They called it an 11th hour bombshell. He resigned the next day, so he knew he was going to. He issued a lawsuit against Ripple for selling unregistered securities. That was last December. It has evolved to the point where they're basically claiming that all XRP before, after, and forever are securities. Which I say to people, that shouldn't bother you, because if you're not accredited, you should just buy up, or not even just accredited, but like if you don't buy from like a security broker, like you can just scoop up a bunch of these, and then when they become securities, they're going to go up in value anyway. That's one of the
right.
the silver linings of that. But they are losing hand over foot. There is an article, if any of you guys are interested in this case, Google conflict of interest, SEC Ripple. There is a government watchdog who has launched a full-on investigation because these guys had ties to the Ethereum Alliance, the Ethereum Foundation, and some other stuff. And a lot of information is coming out. I know you see some of the stuff I post.
I have.
There's a lot of momentum going on right now. And then Google, it was a Forbes article. It was called "The Crypto Uprising the SEC Never Saw Coming." I believe that's what it's called. If you type in "Crypto Uprising Forbes," it'll show up.
Gotcha.
And it basically talks about how the XRP community, which is comprised of a handful of influencers and a few million followers and investors, the community has now sued the SEC for the damages it caused by the global delisting of XRP because of their lawsuit. And the amount of video evidence that has unsurfaced, really just highlighting the uncertainty that has been left in the crypto marketplace purposely by the SEC. They never answer questions. And if you remember, they all will say, "I have to preface this statement by saying these opinions are mine and mine alone and not that of the commission."
Right.
What? Like, you're
Right.
a government agency. Like, what kind of, I get fired up about that. But anyway, that lawsuit is building. It looks very bad for the SEC. They have filed a thing saying that all the documents that Ripple has requested follow under privilege and should not be divulged. Judge Netburn has said, well, due to high public interest and the interesting facts coming forward about this case, I will be reviewing all of these documents in an in-camera review in my chambers, which is basically where the judge looks at it and then determines, can this come up in court, can it not? And I mean, Ripple's demanding that we see their crypto portfolios of all the employees. Have any of you bought and sold XRP before or after it was deemed a security? Who was buying Ethereum and Bitcoin before they call them the free pass speeches? These same guys said that Ethereum, who held the biggest ICO ever, which is an initial coin offering, it's an IPO essentially, but with tokens. It's raising capital for the infrastructure of the thing. They held a huge one. I think it went up like $20-30 million or something like that. And it's the most developed blockchain on the planet. It's a great thing. It has a few faults, but we're not talking about that. I could go on and on all night about it, man. But the ties are there. Fox News, I might have sent you a thing, Fox Business or whatever.
Thing.
That is the first time anybody has came forward and actually addressed it. Hey, man, this is serious. Because I tell people all the time, this is the financial, at least, this is the trial of the century. The implications are so big because this is going to decide what the SEC can and cannot do moving forward in this asset class, either way. And, they got the CFTC doesn't like the SEC having so much authority. You have that crypto working group that Biden formed. It's kind of like, well, what are they doing? I mean, like maybe they could get involved because there's the digital dollar project. That's a big thing going on. I mean, this thing is happening here, there, and everywhere.
Yep.
They're just crushing the innovation, and those same guys, actually, they helped the guy from Alibaba. They helped him launch that IPO originally too. Yeah, which has really brought in some more scrutiny on them because it's showing where a lot of their ties have been winding up in China, which in big business, there's plenty of big business that goes on in China. So I'm
Sure.
not, that's not me taking a stance or
It's
anything.
over a billion potential consumers. So
Yeah, it's a big market.
yeah, yeah. All right.
So
Well,
that's what's going on with Ripple. They were supposed to turn all those documents over yesterday to
okay.
the judge. There has been no news. My advice, which is not financial advice, but it is crypto advice, is that if anybody is interested in XRP at $1, whatever it is, I'm going to look. I think it's one hell of a value, regardless of what it says right now. Yeah, they're $1.12.
Hey, look, you're gonna spend a lot more than that at Starbucks, right? Right about that, So
Hey, and think about it, man. I mean, if their vision it comes true to basically just support the global money and help it get here, there, and everywhere that it needs to go. Let's not even talk about Ripple as a company, what they're doing, but the asset itself, the demand, the buy and sell pressure that would develop because of it, all this constant flowing. I mean, you'd think the market cap, I don't know what it is right now. It's probably like 50, 60 billion, something like that.
okay.
Imagine when that, imagine if the derivatives market winds up on top of that. I mean, you're talking about quadrillions. I mean, it's a lot of money.
Yes, indeed.
So it is another thing I think people should look up is the ISO 2022, which is the new globally agreed upon messaging system that is being rolled out for the financial stuff. It's just basically like a code of conduct is really kind of a way, but it's based on technology. XRP and Ripple are on that list. Algorand is on that list. XDC, which is from Zenfin. They do the R3 Corda settler, which is also used to be partnered with Ripple. Some interesting stuff there. Just look up those ISO 2022 tokens. Those are all my biggest investments. And the reason why is these organizations are already working with central banks and global entities. It's not Bitcoin. We're not going to hold a pizza party,
right?
Trying to promote our token around here. We're going to hang out with, central bankers,
right.
BIS, IMF. That's where Ripple guys hang out. So,
Well, they're hanging out with folk in the know and kind of the conductors in a sense of the.
I always tell people, man, people are like, well, what about, I want to touch on this real quick too.
Go ahead.
I said the ROI opportunities on Bitcoin earlier, and I want to stress this to people. So Bitcoin right now is up hundreds of thousands of percentages from where it started. Fantastic, right? My opinion, why would you buy an asset that has already went from being valueless to residing somewhere around Neptune on the financial landscape? Right. Okay. I'm just, we're not even at the moon with Bitcoin. It is well beyond the moon at this point. And one of my buddies the other day, he said, well, I read Bitcoin's going to $1 million. It might. I mean, who knows? That's going to be up to investors. If they put its value there, it's going to go there. I'm not one to make that statement either way. But if you put, okay, so what is that? That's a 20x from where it exists now, basically. Something like XRP only has to get to $1 trillion market cap to achieve the market cap isn't indicative of what the price will actually be either, but just based on that metric alone, XRP does a 18x, and it's only $18.
Right.
So that's just what I'm saying. You just look at how high that value has to go. It has to go to almost 100,000 for you to get 100%. XRP goes to 250. You're at 125%.
Right. Good point. Excellent point.
It's just and if you're playing the percentage game and it's not about how many tokens you get, that doesn't matter then. You might say, well, I think Bitcoin will get me 5% faster than this other token. And it might. Sometimes volatility goes in ways. But if you look at it from a token accumulation down the road standpoint, and you're investing in something that you really think will be around in 5 years, 10 years, then for me, I mean, I could take $1,000 and get 1,000 of these. I could take $1,000 and get 0.02 Bitcoin.
Yeah. The
I mean, it's still worth $1,000 though. It is still worth $1,000.
Right.
Either way, but the ceiling to floor ratio for me is just, it's cooked, man. I can't.
It's like you know, for the traditional asset analog would be Berkshire Hathaway, you know, versus Palantir. Okay. You got that small cap that's going to, you know, that's where the growth is. Okay. The more mature asset, in this case, Berkshire Hathaway, is not going to make these fantastic percentage leaps. It's
Yeah,
already
yeah,
done
yeah.
that. Yeah, you would have had to jump on board with that, you know, decades ago for it to have done that. Yeah.
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 Now some of those work great for stores of value
Sure.
because they're stable for wealth management purposes and stuff. You
Yep.
got to put it somewhere. So and that's what I always tell people. Your your strategy really matters in all markets. You want to come in and day trade crypto, you can make a lot of money, you can lose a lot of money too. It's very fast. I
Right.
mean, you better have a real good internet connection because it's like there can be no downtime. But I mean, today I had multiple assets go up 18% or better today.
Mm-hmm. Mm-hmm.
Now, it's nothing that I was major enough into where I was making a sale or anything, but the ROIs, man, they're so high. I don't know that Bitcoin. There's a lot of climate talk. That's another group.
Yeah.
The G7, the G3, G20, all those people, and then the World Economic Forum. Man, they are really pounding the table about the economic effects of some of these things too. And that's another reason I don't hold Bitcoin. I do not hold Ethereum, and I do not hold Doge. I am super happy for you if any of you have made money and done well with those assets. I just did not find them to be a viable investment for me because there's too many issues there. Too many
Gotcha.
issues for me.
And that
Meanwhile, I'm throwing all my money at a company that's being sued by the SEC. So what do I know?
hey, but look, you got to pay attention to that environmental aspect of it, because if you look at that whole Great Reset chart, that piece, that's one of the targets. Okay, so
Yeah,
it's going to be
it blows
aggressive.
my mind. It almost has to be what's happening. It has to
Right,
be, man, because I
right.
mean, all the pieces. You look at some of the old diagrams about some of this stuff, and it's like it's crazy.
Yeah,
Think about it. You will own nothing, and you will be happy. That's what they said, you know.
yeah.
And if all we owned was digital assets, in essence, we really don't own anything
Correct,
tangible at that point.
correct,
So
correct. And you know, just to close it out, that guy Schwab over at the World Economic Forum,
yeah,
he I just look at that pronouncement by him as just saying, hey guys, look, this is what's about to occur. You know, he didn't just get up one morning and decide to say that. That was all
oh yeah,
scripted, that had been through an army of economists,
oh
lawyers,
yeah, oh yeah.
politicians, you know. So that's the direction they want to take. And as I always say, and I know you agree, look, we're going for this ride, and we can decide how we ride. You know, we can get
Yeah, oh yeah.
educated, figure out how to do it the right way. Either way, you know, their force is greater than us that are bringing us along on this ride.
And they will if you Google some information. I can't tell you the terms to type in specifically, but a lot of those big economists have said, and it is documented, that the central banks prefer an overnight switch method. And that is
Yeah.
something I tell people to keep in mind because the XRP community being so tied in with the banks and like that being the whole thing, you'll hear some of these moon boys, man, they tell you straight up, you're going to wake up one morning, it's going to be, $10,000 in XRP, which if the mission's achieved, it very well could be. That's yet to be seen. We got to get to this lawsuit first, but
Right.
you just think about the overnight switch thing. COVID has really accelerated the digital asset space for one. It has really accelerated a lot of innovation that's taken place. The need for some of this traceability with information and stuff, blockchains being brought into
Yep.
it, big. And I just want to close out with this one thing on my end. This is from the Consensus website, which is Joe Lubin, who was one of the original founders of Ethereum. It's his other company. I'm not a big fan of them over there, but they are good at what they do, so that doesn't really matter. This was a recent article they put out, and this just covers some of the major use cases and applications of blockchain technology today. And I just wanted to read this because this is some of the stuff people don't realize is this will be very quick, but the capital markets, and the brief description says blockchain unlocks easier, cheaper, and faster access to capital. It reduces barriers to issuance and enables peer-to-peer trading, faster, more transparent settlement and clearing, reduced costs, decreased counterparty risk, and streamlined auditing and compliance. Just to touch on what I know a lot of you guys are looking at. I mean, that's what they're saying, blockchain. Yeah. And that doesn't mean that there might necessarily be a token that's related to that. Just the tech. The tech is exciting. CBDCs, decentralized finance, digital identity. I am a part of the global ID community. That's Greg Kidd. I suggest you all look up who he is and just check out global ID. It might be interesting to you guys. Energy and sustainability, finance, we've already talked about, insurance, healthcare, life sciences, government and the public sector. I know somebody who has heard rumors that a certain state is already talking about applying blockchain technology to the voting machines because they don't want to have this conversation about voting machines anymore. And that would be an easy way to just, okay, you can't anymore because you can't do that. Law, media and entertainment, NFTs are all the craze. That's not really my thing. Real estate, we talked about. Social impact, like Afghanistan, they shut off all their money. The IMF did.
Saw that.
They've been sending so much crypto to some of those families in need. There's a couple organizations that have really been helping the people who are in a bad situation over there right now. Right. Retail, syndicated loans, supply chain management for logistics, a big one, and that will help with inflation and stuff too eventually, I think.
Well,
just keep that in mind, guys. It's not just fake internet money. The tech is real. It is powerful
and backed by some powerful people. Very powerful people and organizations. Absolutely.
Oh yeah, definitely.
So, all right, we're going to put this out for the audience, and man, as this stuff continues to merge, we will be collaborating more, man. I really, really appreciate your time.